Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today it will be a bit specific update, specific video dedicated to Australian dollar. So relatively rare taking a look at the Asian Pacific currencies and New Zealand dollar, Australian dollar, but currently, well, among all major currencies, Australian dollar shows the setup that looks brighter than the others. And in recent few weeks, the commodity currencies have got the fresh breath, and as you know, it's great performance in copper, in the basic metals. So all this stuff, and in general ideas on possible recovery of the global economy, first of all, is supporting for Australian dollar and commodity currencies. So Australian dollar, New Zealand dollar, Norwegian krone, and some others. So, and that explains the really excellent performance in Australian dollar in recent time. Besides, as you know, the Bank of Australia has higher interest rates that makes the Australian dollar more attractive for investing. And in the new environment, investors think on the perspective of the maybe more aggressive policy on Australian Bank, or at least that Australian Bank will be able to keep this cap compared to other major central banks on the interest rates. In recent statement of the New Zealand Bank is also was supportive to the markets. So in general, overall sentiment stands relatively positive in the medium term for commodity currencies. Still, the recent sell-off that we see here has made an impact not only on the currencies that we are watching, usually the euro currency, Great British Pound, but the Australian dollar also has not become the exception, and that recent collapse could become the source of the few trading setups. So first of all, on the weekly chart, this action has become really important because this drop in the recent week has become the reversal week. So that was the one reversal week on the weekly chart. Second, with this reversal week, market mostly played down the all February upper performance. Market closed back near the bottom of the February. So February has started right here, and on the weekly chart it also creates not really very positive background for short-term action. Directly on the daily chart we see sharp reversal of the trend. We've got also bearish divergence right here. And on the daily chart, potentially, we will not exclude the chance that we will see head and shoulders pattern. Because currently in this part, everything stands just perfect. Let's take a look. Head 1618 over the shoulder, sharp reversal on the top, and fast drop on the second part of the head. So this second part of the head and shoulders pattern has to be controlled by the bears. And we will see gradual upward action here and sharp sell-off here. That's stands well very good for the hand and shoulders pattern because it it's confirmed the nature of the reversal pattern. That's great. But at the same time, currently market stands at daily oversold. It hits the oversold. And first trade that we're discussing stands on the daily chart, which is particularly hand and shoulders, but it's yet to be formed. As you can see, market first has to reach the neckline, then it has to form the shoulder, and only after that it could become the deeper retracement. So at least here we could get few trades on the daily. It's direct head and shoulders, but on intraday charts we will consider currently the possible reaction on the oversold. Then we will see what will happen around the neckline, because here also minor bullish setup intraday charts could be formed, and only after that we could turn to the bearish setup here on Australian dollar. So that's why today we intend to keep an eye on the intraday chart. So first of all, as we said, market at the oversold, but take a look from the follow time frame chart. Market also stands at the fib support. So that creates an actually setup that's called by the chart example as bearish bullish stretch pattern, so a combination of the fib level with the oversold condition. It's great background for a possible pullback to the upside. But the problem here is that we do not have the clear bullish pattern. And one thing that we could consider, I suppose, take a look at here. We have the perfect thrust down. Market stands below the major 30% resistance. That's great. So we do not have the brand body sell, but potentially we could get the double repo buy, for instance. So take a look. Market already shows close above the 3x3, standing below the major level. That's important. And now we need to get second bottom close below the 3x3. Could happen within a few hours, as you can see. But we need to get the sign on attempt market to go lower. So it should show some attempt to break these lows to form approximately equal bottoms. So in this case, this will be kind of then to just retreat and close above the 3x3 again. So some bearish capitulation should happen here around this support to let us step in with a possible upward bounce with this trade. In the case if this will happen, the minimum target will be somewhere around 50% level, 78.50, or maybe 78.80. 618 is also could be reached by the double repo pattern. Maybe some other patterns could be formed here. So the one thing that we would like to get here around this support is a kind of the bullish reversal pattern. That's what we would like to get. In fact, we already have its Jordan upward stretch, and potentially speaking only on the stretch pattern, that's what was the point to go long, because stretch has been formed, upward action has started, retracement, as theoretically you could possess yourself if market will just show gradual upward pullback. It also could happen. But since we're taking a look at this pattern only now, we need to get something. So maybe it will be kind of the, I don't know, on the hourly chart, maybe it will be Garfield Chipple to buy or something of that sort. Here it might be the double repo buy. Some other patterns could be formed. So that's the short-term stuff that we intend to keep an eye on. And today, tomorrow probably. But potentially, as I said, that might be really the source of the different stuff, different patterns in Australian dollar in the near couple of weeks. So let's see what we will get on Australian dollar. Speaking, guys, on the euro, as you know, and you see on the chart, the setup that we discussed previously has not been realized because we agreed to watch for grabber. Grabber has not been formed, market just moving down. And as we said in our report weekly, it is crucial for the market to stay inside of this swing. Since market is just showing downward action, we do not have any intention to go long because it's unclear whether the market will be able to hold here or not. This first moment. Second, we anyway have to wait and see for possible bullish patterns inside of this swing. Once it starts to forming, we definitely will take a look again on the euro currency and make the decision. But taking into consideration that we have the acceleration here, that's a bad sign for this setup, and it's more suggesting that we still could get direct ABCD pattern to the downside on the weekly chart and return back to the question of the upward reversal somewhere around 1887 area. So that's probably the reality that could become the truth very often, very soon. So that's why it makes sense to take a look at the Australian dollar, because on the euro currency currently, well, do not see something really valuable.